Welcome back. Now market's pretty stable, so let's get across to FMCG. Defensives, not the flavor of the day because it's a risk on, but nevertheless, these are companies that have posted very robust growth. Godrej Consumer is one among them. Mahendran, MD of that company, joins us. They've recently done a deal again with the Darling Group where they've signed exclusive rights to include the hair extensions in Kenya and other East African geographies. Mr. Mahendran, your push towards inorganic growth continues. What else can we expect from GCPL?
Yeah, I think you can expect fairly robust growth quarter by quarter, which you've been seeing in the last 8 quarters, both organic as well as inorganic. And as you might have heard last week, we did close the second phase of acquisition in the Darling Group and in Africa, in the hair extension business, which is we acquired the Kenya business in Kenya, and this Kenyan business supplies goods to the entire Eastern Africa, to countries like Rwanda, Uganda, as well as Tanzania. That's how we do.
Okay. Well, actually, at the moment, I'm more interested in what is the hair extension business and what it can do to a person. But anyway, let's concentrate on the financials, Mr. Mahendran. What part of your business comes from non-India destinations? And over there, are you confident of the growth continuing? What is the growth pace? And is there any slowdown indications?
1/3 of our business comes from outside India, and within India, domestic is about 2/3. Now, our growth rate, both as well as within India and outside India, is pretty healthy. And as far as outside India, the growth rate is steady, and we don't expect the growth rate to come down outside India, because we have chosen those assets which are growing. We have also chosen those geographies which are emerging in nature. So we don't expect that to happen.
Okay. The one story that's oft discussed, Mr. Mahendran, these days is the fall in palm oil prices, that being a key constituent in terms of your raw materials. How much of that benefit will reflect in gross margins? And given that a lot of the other players will also benefit, for example, HUL, do you see competitive pressure in terms of pricing increase now because you have leeway on the raw material?
We don't see that. As far as the palm is concerned, we were getting that sober price levels are there. But I don't think any price increase on the soaps, personal wash segment. I don't see that at the moment.
Mahendran?
And yeah.
No, go ahead. Sorry.
So we are fairly this year, at least for the next 2 quarters, we should be stable in terms of price.
What percentage of your costs are really accounted for by these raw material? I would assume packaging and marketing would be a far more expensive venture than raw material. What percentage does it constitute of your total costs?
Of the total cost, if you're talking about only palm, of the total cost should go up to about 15%, only the palm cost.
And total raw material cost?
Raw material cost should be around 30-35, which includes the packaging and the other raw materials.
Okay, so if you're suggesting that pricing remains stable for the moment, then gross margin definitely is in expansion mode. It should improve at least well on a year-on-year basis. And the other thing, what's the volume growth picture looking like? Have you been able to maintain the levels we've seen in Q1? Has it softened? What's the trend been?
Yeah, volume levels we are expecting to maintain. We don't expect any, at least in this quarter, the volumes are good. And margins could improve. That's what we're expecting. The margins could improve.
How would
if the price levels are still further in Q3, if it sobers down further, yes, why not? This will have a definitely positive effect on the margins. Yeah.
How about ad spends? What percentage of your sales would be accounted for by ad spends? We understand that ad spends were up last quarter to about 153 crore. What would it be this quarter?
See, we have the growth rate of ad spends, which has got a direct link to our top line growth rate. So we will definitely improve our spends when you compare to the previous year. But that has got a direct correlation to the top line growth also in terms of absolute spends. As a percentage, we will not be able to disclose as a percentage what we are spending on for competitive reasons.
Okay. What are your, inorganic intentions within the country itself? Should we get to hear something in 2012?
Inshallah, yes, why not? If we get a good acquisition target in India, we will be happy to look at it.
No, are you already looking? Are you already halfway
today,
through something?
Are we looking anything right now? No, nothing at the moment.
Fair
But we are always open and we are always pro domestic acquisition. But nothing on the cards at the moment.
Fair enough. We'll leave it at that, Mr. Mahendran. Pleasure speaking to you. Thank you very much for joining us. So that's certainly a spring in the step as far as both volumes and margins are concerned.
The flash that we are running is price hikes, not on the anvil. It should actually be price correction because the palm oil prices have gone down. There is an expectation that because HUL, the bigger player, has some leeway, there could be some pricing aggressiveness. So, but GCPL doesn't see that in the near term. That is why we called Mr. Mahendran. That's the bread and butter business. 25-30% of the business comes from soap and personal wash. Let's take a short break. When we come back, time for some interesting sell-side advice, primarily focused on the SEB.